Hi everyone, today we'll be going over accounts, February-March 2022, paper 2-2, question number 1. This is structured paper 2, which consists 4 questions, 2 of 30 marks and 2 of 15 marks, and we are also given a time limit of 1 hour 30 minutes. Since question number 1 is of 30 marks, we will be attempting to solve this question under 30 minutes. So without any further delay, let's get started. Rafiq owns a retail business, and when the business was opened a few years ago, Rafiq maintained only minimal accounting records. Now, for the first part of this question, we need to state 2 reasons why the owner of a business might maintain minimal accounting records. So the first one could be the case that there is a lack of expertise. Maybe the owner does not have sufficient knowledge that is required to maintain full accounting records, and that's why the owner might prefer to maintain minimal accounting records. Let's write it down. Lack of expertise. And the second one could be that maintaining a minimal accounting record would require less time than maintaining a full accounting record, right? So maybe the owner would prefer it because it would be less time consuming. Let's write it down. Less time consuming. Okay, this concludes the first part of this question. Now we can move towards the second one. For the second part, we need to identify 4 benefits of maintaining full accounting records. So the very first benefit would be that we would get access to full information about the assets, liabilities, capital, expenses, as well as revenues. Let's write it down. Access to full information about assets, liabilities, capital, expenses, and revenues. And then the second benefit of maintaining full accounting records would be that as we have access to more information, then decision making would be more informed. Let's write it down. More informed decision making. Alright, then since we have full accounting records, then there is very less possibility of fraud, right? So this definitely reduces the possibility of fraud. Let's write it down. Possibility of fraud reduced. And then the last benefit would be that since we have full accounting records, it means that we will have our journal, ledgers, trial balance, income statement, balance sheet, cash flow statements, and all of those, which enables analysis of performance, because we could perform ratio analysis and determine whether the company is performing good or not and compare it with the competitors or the market standard and determine where the company stands within that particular market. So let's write it down. Enables analysis of performance. Alright, this concludes the second part of this question. Now we can move towards the third one. We can see that we are given additional information. More recently, Rafiq has been able to provide more detailed financial information. And the first information is that on 1st January 2021, the business's assets and liabilities were as follows. So we have cash in hand, which is an asset, bank overdraft, which is a liability, furniture and fittings, which is an asset, trade payables, which is a liability, inventory, which is an asset, and rent prepaid. So this means that we prepaid the rent, but in return, we still require to use the rented space, right? So this is definitely an asset because this is prepaid expense. And these values are at the date of 1st January 2021, which could be our opening date. Then for the second information, we are given the following summary of receipts and payments for the year ended 31st December 2021. So which means that the previous information, whatever assets and liabilities we had, this is the values at the opening date. And we have our receipts, cash sales banked, disposal of furniture and fittings, and the payments are the drawings, trade payables, rent, additional furniture and fittings. This means that new furniture and fittings were purchased. Then the installation cost for new fittings. Then we have general expenses. Then the third information tells us that Rafiq purchases all goods for resale on credit basis. And we are also told that all sales are on a cash basis. Then we are told that a cash discount of 5% was received when Rafiq settled debts with trade payables during the year ended 31st December 2021. So this just means that whatever Rafiq paid for our trade payables, those were paid after allowing for a cash discount of 5%, meaning that if the entire purchase, 5% were discounted. So only 95% of the actual purchases were paid. Let's have a look above. So our trade payables is right here, and this is the payment made for trade payables. So this amount is paid after allowing for a 5% discount, meaning that this is only the 95% of the actual value of the purchase, right? So let's figure out the purchase value, and this is only the 95%. So we can just multiply it with 0.95, and this equals to the amount of 93,100. Which means that the total purchases amount was 93,100 divided by 0.95, which results in the value of 98,000. Alright, then at 31st December 2021, trade payables totaled 9,230. This is the trade payables balance at the year end. Now for the third part of this question, we need to calculate the total purchases for the year ended 31st December 2021. And remember that we were given an information regarding our purchases. Rafiq purchases all goods for resale on a credit basis. So if we're talking about credit basis or credit purchases, this obviously involves our trade payables, right? So our formula for figuring out the total purchases would involve the opening trade payables balance, closing trade payable balance, and whatever amount we paid towards the trade payables during this particular year. So I'm just going to write down the format. We will be starting with the payments made to trade payables. And remember that trade payables arises only when there is a credit purchase, and the payments indicate that we are paying back for whatever goods that we purchased on credit. And this payment made to trade payables will be given at our receipts and payments account under the heading of trade payables right here. But remember that we were also given additional information which stated that a cash discount of 5% was received when Rafiq settled debts with the trade payables. And since we are trying to figure out the total purchases, we need to include the value without incorporating this discount, because this discount was not given when we actually purchased the goods on credit. This discount was given when we made the payment, which is not associated with the purchases amount, right? So in order to figure out the total purchases, the payments made to trade payables should not be including any of the discounts, meaning that we need to include the original purchases value, which we figured out to be 98,000. This is the value without any cash discount. So let's include this value of 98,000. Then the next step would be to add our closing balance of trade payables. So that's closing balance of trade payables, which is given right here at 31st December 2021. Trade payables total 9,230, and we are adding this amount in order to figure out our total purchases, because whenever we're talking about trade payables, it obviously is the value that arises after making a credit purchases, right? And since this is the end value at 31st December 2021, which is the closing date, right, which means that this is the value of the trade payables arised after making a credit purchase in this particular year. And since we are trying to figure out the total purchases for this year, this value should definitely be included. So we are just adding it. That is 9,230. Then the last step would be to subtract all of our opening balance of trade payables. And this is given above right here. So we have trade payables right here at the opening date of 1st January 2021, which amounted to 11,870. And we will be subtracting this amount because, like I said before, trade receivable arises from the credit purchases made, right? But since we are talking about the balance at the opening date, this actually indicates the credit purchases made in the year ended 31st December 2020. And since in this question we are trying to figure out the purchases for the year 2021, this value should definitely not be included. So we're just trying to subtract this amount. Let's do that. That is 11,870. And we need to subtract it. Now this will give our total purchases for the year ended 31st December 2021. And that is just the sum of these three amounts. So that's 98,000 plus 9,230 minus 11,870, which gives the total purchases for this year to be 95,360. This concludes the third part of this question. Now we can move towards the fourth one. We are again given additional information. During the year ended 31st December 2021, some cash takings were not banked but were used to pay wages, 21,540, and drawings 2,580. And what we know is that all of our sales were cash sales. So these cash takings were actually made from our cash sales, which means that this value of 21,540 and the value of 2,580 should be included in our revenue, right? So let's figure out the correct revenue. Okay, let's have a look above. In our receipts section, we were given cash sales banked right here. So this indicates the amount of cash revenue, right? And this amounted to 132,200. Let's start with this value. So that's 132,200. And now we need to add these wages of 21,540. And we also took some drawings from the cash taking, so that should be added back to our revenue as well. So that's plus 2,580. Now let's see if there are any more adjustments to be made to our revenue. We are told that Rafiq took goods costing 480 for private use. So whenever we are taking drawings, this should be subtracted from the purchases, right? But you might be talking about, but previously we had drawings as well. So why are we not subtracting this amount from the purchases? But we are told that these drawings were taken from cash and these cash arise from our revenue. So that's why this needs to be included back in the revenue. But in case of this value, we are told that Rafiq took goods, and goods are something that can only be taken from the purchases made, which means that this drawing of 480 should be reduced from the purchases. So let's do that as well. And we already figured out the total purchases on the above question. And this amounted to 95,360. Let's write it down. That's 95,360. And we need to subtract this drawings of 480. Now, maybe there are other adjustments to be made to purchases, so I'm just going to leave it at here. Then we're told that furniture and fittings with a value of 2,950 were sold. So this just indicates the net book value of the furniture and fittings that were sold. And we are given the disposed value as well in our receipts section. Right here, disposal of furniture and fittings amounted to 3,480. So this is the sales value that we received, which is obviously greater than the net book value, right? Which means that there was a profit on disposal. So let's figure out our profit on disposal. Profit on disposal is just going to be the difference between the sales value and the net book value. And above, we can see that our sales value was 3,480. Let's substitute this amount. And we're just going to subtract the net book value of 2,950, which gives our profit on disposal to have the value of 530. Okay, and then at 31st December 2021, cash takings of 1,200 had not yet been banked. Again, this is the value from the cash sales which had not been banked, which means that this has not been included in the value from our receipt section, which is right here. So we need to add back our 1,200 towards our revenue as well. Let's add it. So that's plus 1,200. Then the balance of cash in hand was 920. So we need to figure out whether there was an increment in the cash in hand value, because that increment should also be adjusted to the revenue, because cash in is only being made from the revenues, right? So this is the closing value. Let's look at the opening cash in hand value, which is given right here at the date of 1st January 2021. Then the cash in hand at the opening date was 840, which has definitely increased, right? So this increment, let's figure out the increment. So increment in cash in hand, we just need to subtract the opening value from the closing one, and we have the closing value to be 920. minus the opening cash in hand amounted to 840, which results in the increment in cash in hand to have the value of 80. And again, like I said before, the cash-ins are only made from the revenue, which means that this increment in cash should also be added back towards our revenue. Let's add the 80 as well. All right. Then we are given that the inventory was valued at 11,920 at the date of 31st December 2021. So this is definitely our closing inventory. And then the furniture and fittings were valued at 23,400 now. Okay, so we can just leave this information as it is for now. And for the fifth information, we're told that rent of 1,440 was prepaid. So this definitely needs to be adjusted. Let's have a look above. So previously, the payment of rent, which is given right here, amounted to 14,750. So let's figure out the total rent paid for this particular year. We will definitely be starting with this amount of 14,750. Let's write it down. So the rent for this year will be 14,750. And then we need to adjust this closing prepaid. So this is at the closing date, which means that this amount is actually for the next year of 2022. And since we're talking about figuring the rent for the year 2021, this value should not be included, right? So we're just going to subtract this value of 1,440. And if you remember correctly, we were also given the opening rent prepaid. So let's have a look above. Right here, there's rent prepaid at the opening date, and this amounted to 1,250. So this was prepaid at the year ended 31st December 2020, which means that this rent actually belongs to the year 2021, which means that this should definitely be included when figuring out the total rent for the year 2021. So let's add this amount of 1,250. So that's plus 1,250, which gives our total rent for the year ended 31st December 2021 to be 14,750 minus 1,440 plus 1,250, which results in the value of 14,560. And since we completed all of the information, so we can move back to figuring the total revenue and purchases. For revenue, that's going to be 132,200 plus 21,540 plus 2,580 plus 1,200 plus 80, which results in the value of revenue for this year to be 157,600. Similarly, for purchases, that's going to be 95,360 minus 480, which results in the purchases value to be 94,880. Okay, let's have a look at the above information to see if we missed anything. Okay, we were told that we were given the discount as well, right? So let's figure out the value of this discount as well. And this discount is just going to be the difference of the actual amount and the amount paid after getting the discount. So that's 98,000 minus 93,100. Which results in our discount to have the value of 4,900. Okay, then we already utilized our cash sales, disposal, drawings. We can just ignore it for now. We figured our discount from this value. Then we adjusted rent as well. And there was new purchases of furniture, and there were no given information regarding general expenses. All right, so let's have a look at the fourth part of this question now. We need to prepare the income statement for the year ended 31st December 2021. Again, we are given working sections, so instead of scribbling all over the question paper like I did, you guys should be showing all of your workings in this particular box. Now let's get started with the income statement. We are preparing it for Rafiq for the year ended 31st December 2021. And since we are talking about income statement, we will definitely be starting with our revenue. And we already figured out the revenue, so we can just substitute that amount. We calculated it to be 157,600, so let's write this value into our income statement. 157,600. Then after revenue, we will move towards our cost of goods sold. And the first item to be included in the cost of goods sold would be that of opening inventory. And the value of opening inventory is given above, so let's have a look. we are given informations at the date of 1st January 2021, and we have our inventory right here. This will act as our opening inventory, and the value is 14,430. Let's write it down. That is 14,430. Then the next thing would be to add all of our purchases. And we calculated the purchases to be included after excluding the drawings right here, which amounted to 94,880. Let's substitute this value. That's 94,880. And then finally, we will be subtracting our closing inventory. So that's less closing inventory. And we were given the closing inventory value above. Right here, these informations are at the date of 31st December 2021, and the inventory was valued at 11,920. So this will definitely act as our closing inventory. Let's write it down. That's 11,920, and we need to subtract it. So I'm just going to put it in bracket, indicating that this needs to be subtracted. So this concludes our cost of goods sold section. So now we can figure out the total by adding these three amounts. So that's 14,430 plus 94,880 minus 11,920, which results in the total cost of goods sold to have the value of 97,390. And since we need to subtract the cost of goods sold from revenue, I'm going to put this in a bracket as well. Now we can easily figure out the gross profit. And gross profit is just going to be the difference between revenue and cost of goods sold. So that's 157,600 minus 97,390, which results in our gross profit to have the value of 60,210. All right, then after gross profit, we need to add all of our incomes. So I'm just going to add the income. And the very first income was that we figured out during the disposal of furniture and fittings, there was a profit. So that would act as our income. So profit on disposal of furniture and fittings. And we figured it out above, so let's have a look. Alright, so profit on disposal amounted to 530. Let's include this in our income statement. That's 530. And the next income would be the cash discount that we received while making payments to the trade payables. Let's write it down. Discount received. And we also figured this amount above. Right here, the discounts amounted to 4,900. So let's include this value. That's 4,900. And this concludes all of the incomes. So let's figure out the total. That's going to be the sum of these two amounts, 530 plus 4,900, which results in the total income to have the value of 5,430. Okay, then the next step would be to subtract all of our overheads. Okay, let's have a look above. The very first overhead would be rent, and we already figured out the amount of rent for the year ended 31st December 2021 to be 14,560. So we can just substitute this amount into our income statement. Let's write it down. That was rent of 14,560. Okay. Then we have wages right here. So wages amounted to 21,540, which is an overhead. So let's include this in our income statement. That's wages with the value of 21,540. Okay, then we don't have any other information here, but we have general expenses right here, which amounted to 5,940. Let's write it down. That's general expenses with the value of 5,940. And since we have our asset furniture and fittings, there would be depreciation on that particular non-current asset, right? So let's write it down as an overhead as well. Depreciation on furniture and fittings. and we still need to figure this value. So I'm just going to write down the formula for the schedule of non-current assets. We start with the opening net book value, right? And then we add all of our new purchases. And this purchases is to be recorded at the cost. Then we subtract all of our disposals. And this disposals is to be recorded at the net book value. And then definitely there is the depreciation for this year. And after this, we will get our closing net book value of the non-current asset. So we are just going to utilize this formula and figure out the depreciation for the year. So let's start with the opening net book value. Let's have a look above. At the date of 1st January 2021, we were given the value of furniture and fittings to be 22,710. So we'll start with this particular value. Let's write it down. So that's 22,710, and I'm going to write this in an equation form. So now we need to add the purchases. So let's have a look above. Purchases were mentioned in the payment section of receipts and payments account right here. So additional furniture and fittings amounted to 8,000, but we can also see that there is an installation cost, and installation cost is something that is to be done only once. So this is non-recurring expense, which means that this can be included in our capital expense. So the total purchases should be 8,000 plus 380, which is 8,380. Let's include this in our equation. So that's plus 8,380. Then we need to subtract our disposals, which again we were given above, right here. So furniture and fittings with a value of 2,950 were sold. Like I said before, this is the net book value, and whenever we're talking about disposals, its net book value is recorded in the schedule of non-current assets. So we're going to include this value of 2,950 minus 2,950, and we're trying to figure out the depreciation. So that's minus D equals to the closing net book value, which is again given above right here. At the date of 31st December 2021, furniture and fittings were valued at 23,400. Let's write this value. Now this is a very simple equation, right? So the depreciation, I'm just going to bring this to the other side and this value to this side. So this is going to be 22,710 plus 8,380 minus 2,950 minus 23,400, which results in the depreciation for this year to have the value of 4,740. So let's include this value of depreciation in our income statement. That's 4,740. And this includes all of the overheads. So let's figure out the total by adding these four amounts. That's going to be 14,560 plus 21,540 plus 5,940 plus 4,740, which results in our total overheads to have the value of 46,780. And since we need to reduce the overheads, I'm just going to write it in bracket. Now we can easily figure out the profit for the year. And profit for the year is going to be gross profit plus income minus overheads. In this case, that's going to be 60,210 plus 5,430 minus 46,780, which gives our profit for the year to have the value of 18,860. And this concludes the income statement as well as the fourth part of this question. Now we can move towards the fifth one. We are given additional information. Rafiq would like to expand his business but requires additional finance to carry out this plan, and he is considering two options. So the first option would be to invite a friend Khalid to become a partner in the business, and he would introduce capital of 10,000. And option 2 states that Rafiq should apply for a bank loan of 10,000. Now for the fifth part of this question, we need to advise Rafiq which option he should choose, and we need to justify our answer by discussing both financial as well as non-financial issues of each option. So let's consider option 1 first. And option 1 includes the introduction of a new partner, right? So whenever we're talking about introduction of a new partner, then we definitely have to share profits with that said new partner, right? Let's write it down. Will have to share profits. And since now there is a new partner, maybe decision making would take longer and there might be some disagreements, because previously Rafiq used to make decisions on his own and there would have been no disagreements, right? But now with the introduction of new partner Khalid, he would have to consult with his partner and then come up with a solution. And maybe Khalid and Rafiq may not have the same point of view or perspective to looking at things, right? Which might create some disagreements. That would be a disadvantage. Let's write it down. May result in disagreements. But since we are introducing Khalid, maybe that would lead us to the introduction of new ideas as well as new business skills, because Rafiq and Khalid are different people, right? So maybe Khalid could bring in new ideas as well as his particular expertise and skills, which would be a major advantage to this particular business. Let's write it down. May bring new ideas as well as expertise. And previously Rafiq used to work as a sole trader, right? But with the introduction of Khalid, maybe Rafiq's workload will be minimized and there would be shared responsibility, meaning that Rafiq could feel ease at his workload. So that is an advantage. Let's write it down. Will ease Rafiq's workload as well as the responsibilities. Okay, now let's move towards discussing option 2. For option 2, we're told that Rafiq should apply for a bank loan of 10,000. So obviously this does not include an introduction of a new partner, which means that profit will not have to be shared. Let's write it down. Profits are not shared. But doesn't mean that this will have no effect on our profit. Since we are talking about applying a bank loan, there would be interest payments on the bank loan, which could potentially reduce the profits. Let's write it down. Loan interest will reduce profits. And since there is no new partner, Rafiq would still remain as the sole owner of the business, which means that he will have the entire control of this particular business. Let's write it down. Rafiq remains in sole control of the business. And we're talking about a bank loan, meaning that this would act as a temporary source of finance which needs to be repaid in the future. Let's write it down. Temporary source of finance which needs to be repaid in the future. Alright, now based on these factors, we need to advise Rafiq which option he should choose. And previously in our income statement, we figured out that the profit for the year was 18,860, which means that this could definitely sustain to repay the future loan. And with option 1, there comes the shared responsibility as well as shared profit. And there might be a risk of disagreement as well. So I would personally prefer Rafiq to choose option 2, which allows him to keep his profits as his own and also brings in the additional capital. Let's write it down. So decision would be that Rafiq should choose option 2. Alright, this concludes the 5th part of this question as well as this entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you subscribe to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.